Hey, good afternoon, everyone. It's 2 o'clock. We've had some time to think about and analyze the information given to us by the USDA. And I'm just going to jump over here to the balance sheet so we can just jump right into it and see what the USDA tells us um, is new in the world. So we were expecting an increase in carryout, and the USDA did not disappoint. So for comparisons, as you're looking at this spreadsheet, this is old crop, okay? This is what they said happened last year. We planted 88.6 million acres, average yield of 173.3, right? We harvested 79.2, and that ended up after we took demand all the way down to 13.8 billion. That ended up with a carryout of 1,342 million. The USDA said that they found more bushels in old crop and they increased the number to 1417. So this is what the USDA printed today, and I have that copied over here in the neutral case. So whether we want to believe the number or whether we don't want to believe the number, as far as 92 million acres planted and 181.5 bushel to the acre, it doesn't matter what you want to believe because this is what the market's going to trade at least until the June 30 report, where the USDA may tweak that. You know, they may lower this if it has prevent plant, or if for some reason we don't plant as many acres. It may tweak this based on weather, but it's really not going to do anything until that happens. We're also taking their harvested numbers straight off of their list. Now, the other thing I'm doing is copying just direct their demand number. And what I want you to see is what they did here with demand, because they didn't just throw all the bearish stuff at you. To me, maybe the most bearish thing about this report is that they actually increased the demand for us at 14,485 from 13,8. So increasing demand by a sizable amount in the face of increased production, they did that just to keep the carryout respectable. So at a 2.2 billion carryout, let me show you what it would have been had they left it as was. It'd be almost 3 billion bushels, right? So the USDA didn't want to print that number. They thought that would be too bearish, so they increased demand. So now the question is all about yield. Now we're in a supply-driven market. We're going to plant the corn. We're going to harvest it. Weather looks good. Now it's all about yield. So what I've done here is isolated the yield variable so you can see its impact on carryout, okay? And this is last year's yield at 173.3. This is what the USDA predicts, and this would be an optimistic 183. The largest yield on record is, I think, a 177.5 or something like that, and that was a couple of years ago. So obviously this is forecasting a record number, but it's a bearish number, no question about it. Price of corn does not need to trade higher if this is what our ending stocks is. The only way it can really, in my opinion, start a bull market is if we get a weather pattern that shifts and puts the yield down into this territory. And even if we drop all the way to 173.3, it's still not that bullish because we're already trading those levels, right? Because we've been trading a 1342, and at a 1373, it really has very little impact to price. And so I think longer term, the trend is lower for corn, and we'll see that in a chart here in a second as well. And this shouldn't be a surprise to anyone. We've shown you this balance sheet lots. The numbers change a little bit down here, but in reality, we've been looking at something north of 2 billion for quite some time, thinking that that might be the case. Okay, beans, what did they do here? Beans are almost the same thing as corn. They increased demand above from where it was. They actually found a few more bushels there too on old crop, and they left yield at 52. So you don't have to agree with it, but you have to trade it because that's what they printed. And they print our carryout growing from 210 to 332 million bushels with a stocks to use at about 7.5. So that's not quite as bearish as what maybe we had previously thought. But here is what's bearish, is that on the world supply for soybeans, they increased it by 15 million metric tons, which is about 410, 415 million bushels, depending how you talk about it. So if that number reflects itself into lower into fewer exports, then it decreases this number and would therefore increase this one, right? So the way these balance sheets work is that if this number grows because South America has too many bushels and needs to sell more, then this number swells and our prices go lower. So this isn't $8 beans, but it's definitely not 13. It's probably not 12. It's probably somewhere in the 10, 10.50, maybe $11 range is where this is. And this is probably in the 4 to 4.50 range. And I don't think it'll go straight there, but it is definitely not a $5 plus handle unless we have a weather problem. So the question is what does the market, how does it digest those numbers moving forward? Okay, let's look at what the charts tell us. Here is new crop beans down 25. We had turned a little bit bullish earlier in the week based off of these divergences. The problem with the divergence in a 13 is that if they don't work out, then they tend to fail miserably. And so down we go, right? So this is now what was once support is now resistance, and anything under 1250 is bearish. And in order to turn this thing bullish in any way, you got to look back up above 1250. Let me show you the weekly chart here. Come on, computer. All right, here's your weekly chart of beans. Definitely bad, bearish engulfing. Absolutely took out a lot of support and a lot of issues here. So I think lower we go on beans, and I don't know exactly where this will bottom, but on the weekly chart there are no divergences here, so they can stay oversold for quite some time. On the daily chart, you know, where might we trade to? Let's put up some retracements up here, and let's go off of this low. So really we're looking down to 1138, potentially even down to 1087 off of this move here, and that is measured off of the peak of this wave 2 move right here and looking backwards. So it's a Fibonacci extension, and it just absolutely collapsed today. Now the next thing let's look at is old crop beans, because they really didn't fare any better. Let's put this retracement level on here so you can see what it is that we're looking for. On this one, we are looking for a move first to 1380 and then down to 1352. Beyond that, the 1280 mark. Obviously, in order to really complete these counts, we need to come challenge the July extreme down at 1299. And I don't see anything that's going to keep that from happening unless you come in and find immediate strength pretty much Sunday night. But from a daily and a weekly chart perspective, old crop beans, clearly bearish here. We have a big outside week down, bearish engulfing candle. It's also a double close key reversal, and we're right at the bottom of our cloud. So as we work ourselves lower, we should be able to accelerate to that 1350 number, and then ultimately below this low down here at 1299 down to 1278. So beyond that, we'll have to see what happens, but certainly nothing bullish to speak of in those charts, and until we see action that reverses us and takes us back higher, away we go. You can see what we had last week, right? Last week we had a hook reversal right inside our cloud, and we came back to the top side of it, and so that looked really good. Double bottom, nice hook reversal here, and then this week we just absolutely pulverized that count and took it away. So the market spoke loudly, and you got to listen to it, and you got to keep listening to it until it tells you its next thing. Okay. Here is July corn. If there was any hope for the bulls in this complex, it really came down to July corn, because it's the one that didn't just completely implode. You know, they tried to rally it. They rallied it up over 20 since from its where the report came out. They couldn't break it down below this 70 level, and in fact closed it up here at 83. And so, hey, that looks really bullish, right? Well, until you look at this long upper shadow and the fact that it almost completely engulfed the prior 2 bars ahead of it, certainly is not a bullish sign. If you look at the weekly chart of July corn, I would argue to you that this is not bullish either, as it basically fully engulfed last week's trading and didn't quite get a full engulfing pattern here, but it came very close. And really, we've just consolidated in the lower half of the week prior to that. And you can see that on the daily chart, where we've really stayed inside this one big day from April 27th. So really, all the trading action from that day has been on the bottom side of that range, and I would expect that as it falls down below 580, that should accelerate down to these lower levels, F536 down to 517. Because hey, if there's plenty of bushels coming, no one has an incentive to buy it, right? In fact, the USDA found more old crop bushels to bridge the supply to when the new crop comes online. So it's going to take some bullish surprise, like new drought conditions coming into some state here in the U.S. or into South America, something that constricts the growth of supply that we're seeing, because the USDA took away our demand bullishness by increasing demand 600 million bushels already. And to me, that's the most bearish thing in this report, is that they took away our bullish argument. Really, they just led with it and said, hey, yeah, guess what? Even if it does go up, you're still screwed, because we're still going to grow our carry out from 8% all the way to 15 or 17%. So really no reason to look up in corn, or up in corn. Now let's address the one other argument that you could have, which is wheat. Wheat had a big bullish day. This is July wheat. I mean, man, we were up 30 some cents. And so that means that you have to be bullish corn, right? Because if corn goes, they're cousins. They've got to be bullish together. No, they don't. If you look at these spreads, it's wheat can extend corn's life because you can put wheat into the feed ration. Corn can't really extend wheat's life because you can't make a Wonder Bread out of it. So it's not apples to apples. And so wheat can take off and scream higher and still stay within historical norms on its spread. Let me show you what that looks like. Let me show you KWEN23 minus corn, minus July corn. Oh, shoot. Okay, KWE. All right, here is your spread of corn and wheat. So it was wheat minus corn charted back. This is a monthly chart. Let's go all the way back to 1972. We are trading at 257 at the close today. We had a big bullish move. But if you look, yeah, we're kind of at the top end of the range, but we're not historically overbought at all. In fact, we were at $4 last summer, and we can get as high as $6. So wheat can really explode, and corn can go down just as easily. So this spread can get wider, and I really don't think it's an argument to be bullish corn just because wheat is going up. All right, now more on wheat here in just a second. Let's look at new crop corn, because surely that's some hope, right? No, it's definitely not any hope. Same signals as soybeans, really, where we had a little bit of bullish divergence action and some 13s really talking people into, hey, let's take a shot at the long side because surely we're done going down and we're oversold. Well, we just completely undid that today. I mean, we have a bearish engulfing candle that that not only took out the high, but it just absolutely blasted through the lows. Now, we did not break $5 yet, but I would expect that to fall next week, to be honest, unless we get some sort of catalyst. This chart looks even worse on the weekly chart. Bearish engulfing week all the way breaking out to new lows. And we're just in a 4 count here, headed to probably a 13. So several more weeks of bearishness growing in the corn complex, in our opinion, because there's just nothing here to buy. And if you stop and think about it, it really makes sense. If you're going to swell the carryout that much, what incentive do you have to come in and own this crop unless you have a catalyst? And I think the fund managers are probably going to ruminate on that over the weekend and sell it, because unless something happens, then they're going to view that as bearish, and they're going to keep extending their short positions. So we thought we had an opportunity to improve ourselves on a reown. I did a terrible job through here because I was a little late to the party buying it back, and then didn't sell it fast enough. I should have sold it immediately on this day right here, but I didn't, and so we ended up reselling it at lower levels. We gave back about 15-20 cents on that, but hey, that's okay, because if we drop 50 more cents, I'd much rather just admit I'm wrong and say, hey, let's get back in. Sometimes that's the mistake traders make, is they get in a position and then they get taken out of it, and then they're afraid to put it back on because they're too afraid of the whipsaw. But you just got to humble yourself and say, hey, I was wrong, and just because I was wrong doesn't mean that I shouldn't sell it again. And I'm not going to be prideful and just sit here and try to hold on to it if out of fear that it's going to go back up. So you got to sell it again, and if it goes up, hey, we'll deal with it, right? Higher prices aren't going to hurt anybody. Lower prices will. So we got to sell it, and we got to just fall on our knife and say, man, I wish we had that one back, but we don't, and we'll move on from here. Okay, Kansas City wheat. Let's look at that one more time, right? That's the big bullish one. It's okay, and it might go higher, but I really was disappointed in the close because we failed to hold any of this support after we broke it, right? So what was resistance and had acted as resistance should become support, and it failed to do that because we couldn't hold it even on an intra-hour basis. I mean, we bounced up and we came right back into it. So next week, I don't know where wheat is going to ultimately trade. Talking to a lot of you guys, 950 to 10 is what's really going to make harvesting it attractive, and we certainly need the bushels. So I wouldn't be surprised to see wheat try to hold on to the higher end of its ranges here. But the reality is, if Kansas City runs too much higher, I think it's going to be met with selling if corn breaks lower too. So I just don't see Kansas City getting a lot higher than it is. So I don't think we're super bullish Kansas City here off of this close. And if we start closing up on top of this 886 $9 level, then we might rethink that. Otherwise, we're just going to be looking to sell and market more because it could be kind of a fool's trap here if the rest of the complex settles down and drops further. Okay, let's look a little further out in wheat. Let's look at the weekly chart. Right, we said last week, hey, this is awesome. We got a 13 bullish engulfing, and we broke higher. Yes, that's true, but this was actually a little bit disappointing because we were unable to close above all this stuff on a weekly basis. So until it does, we're going to be pretty apprehensive about rushing in and just buying wheat as speculators until we get a little bit more confirmation. Because if this thing just chops sideways here for a few weeks right into the bottom side of this giant cloud, then you want to sell it because you'd much rather sell it and we'll come attack these lows if it rolls over down and out of here. So what you want to see is it just go straight up through it and blast through it and put all this nasty blue resistance up as support if it can get up above it. So that's what we'd rather see happen. I just don't know that we'll be able to do it with as bearish as the rest of the complex is. All right, that's too much talking. That's 18 minutes. That's a lot to cover. It's a whole lot of information. Remember, there's definitely risk trading futures and options. If you don't believe me, just watch it trade. You should only do so in light of your own financial condition. And then call us if you have any questions. We're here to help talk through anything, and we're happy to help you get positioned the way that's safest for you. Have a great weekend, everybody. We'll talk to you later.